Hello, everybody, and welcome to another edition of our weekly video due diligence. We will be covering the dates from June 28th through July 2nd. We're going to be taking a look at some of the technical indicators and supporting technical indicators for this week's price action. And we'll also be looking at some of the trends in the market overall that could affect GME in one way or another. So let's just dive right into this, try to make this video as quick as possible. The first thing we're going to be looking at is our cup and handle. We've been kind of checking this one out for a few weeks. I wanted to break it down a little more and kind of give you guys an idea of what I see in the formation. Um, the first indicator is that it's been formed over 3 months. The peaks of the cup by volume traded are at the exact same resistance level. The formation is supported by an ascending triangle, and that ascending triangle is then reinforced by an uptrend. So let's take a look at this um, over here in TradingView. And as you can see, here is our cup and handle. I've plotted the high right here and low trends. We're well within the range, almost breaking out the top of it back here on Thursday and Friday's price action, but well within the bottom of the range. And we should be consolidating a little bit more, but in a slight uptrend. Here's the cup. Here's the handle. This ascending triangle formation beginning in the run up in March and confirmed by the run up in January here, and again by the run up in early June right there. This is just another indicator, supporting technical indicator for the cup and handle. It also generally breaks out to the upside. They are helped by a long-term uptrend, which we can see here and here on these dotted purple lines. So everything looks great. Super bullish formations. Right here, we have 3 lines. We have our resistance for the breakout. If we cross that, we'll be looking for an actual breakout, and then a cross of 350 will confirm that breakout, as that will be a new volume traded high since January. Everything looks good here. I don't think anything's going to affect it that changes it. It's pretty long term. We may see some variance this week due to the Russell rebalancing, but overall, everything looks very solid and is right on track. Next up, I wanted to zoom in just a little bit and show you guys where we actually sit. As you can see, we did slightly trade just above the upper band of the cup, but still well within the lower range, which is down here. All right. And then next, we will be looking at some of the other technical indicators. The first one being ADX. And we can see ADX here. ADX is a confirmation of trend indicator. Generally, over a period of time, it's called the average directional index. So we're looking for it to move above 33 to confirm a breakout, following a very similar trend, obviously, to the cup and handle. But we'll be looking for a breakout right around this resistance level. If that trend continues upwards, we should see it continue to possibly new highs. Next, we have our moving average 50, which is our 50-day moving average. And we'll be looking for possibly a bounce on this as it's rising up to meet the current trading price and more volume is traded. We may see a bounce off of that moving average as it acts as support moving forward. So just another indicator kind of confirming the cup and handle. The next thing I wanted to talk about was the Russell 1000 rebalancing. I know last week was very dead up until a point, and then Friday, about 15 minutes before close, we doubled our volume for the day in about 15 minutes. And the reason for that is a lot of the ETFs and stuff tend to finalize their trading and their reconstitution on the Russell indexes in the latter part of Friday, historically based on other stocks that I've looked at, into Monday's pre-market. And so we should see continuation of that action going into Monday. Additionally, I'll be looking at CVVWAP for any arbitrage that occurs during that period with the European market, as that arbitrage tends to signal an uptick in GME's price action. Um, Another thing that I'm looking into with the Russell rebalancing that's a little more speculative is I think it may be moving to more indexes based on volume traded compared to other stocks than possibly we thought. It's definitely moving to the Russell 1000, but it also may be moving to the Russell Mid Cap Index, and also its movements on the S&P 600. It is now the highest weighted stock on that index as well. So I'll be evaluating that every day going forward in the stream and on our daily due diligence. Next, I wanted to talk about the SPY. Now, the SPY has been pretty choppy for the last few weeks. I did kind of a deeper dive into it in last week's DD, which is still pinned to my Reddit profile. You can check out that link down below. Um, as always, I try to keep up my previous DDs so you guys can reference them as we move forward. So this week, the SPY had a very nice uptrend all throughout the week. We were predicting as it moved below its moving average here that we were going to see a correction. It reversed that correction and trended right back up. It is about to test the lower resistance of its long-term trend. And we will be looking for, I will be looking for a rejection here, which could signal a downtrend back into these correction zones. This information by no means is advice to play the SPY. It's just what I see happening in the market and how that could potentially affect GME's price. Also, its potential for a short squeeze. Next up is the Shiller PE ratio. I wanted to just touch on this briefly. The Shiller PE ratio is currently sitting at 37.96. It's up from last week and apparently continuing to climb. We've already surpassed 1929's Black Tuesday. We've surpassed Black Monday in the 80s, and we're approaching levels that we haven't seen since the dot-com bubble. A reversion of the Shiller index generally signals a long-term change in economic status and economic trends, essentially a market crash. And so I'm watching this pretty closely as we move forward. But many a dollar has been spent trying to play a market crash, so be wary of that. And so I think that's about it for this week. If you guys have any questions, drop them in the comments down below. As always, a like and subscribe is greatly appreciated. And if you guys want to support the channel, there is a coffee link in the description. Thank you so much, and I'll see you bright and early tomorrow morning for the Monday morning stream. Thank you so much, guys, and have a great night.